Hi, I'm Monica McCarthy with HomeSmart Preferred Realty in Salida, Colorado, and I am here with Jess Fisher from Peakview Mortgage, also in Salida. And we're going to just go into our current market with some predictions for the 2024 year. We're here in January of 2024, and we want to talk about mortgage rates with you and what we're seeing projected for this upcoming year. Let's talk about what's happening right now. We're mid-January 2024. What are we seeing with mortgage rates at the moment?
Right now, we're seeing mortgage rates dropping. I mean, it's
Okay.
definitely dropping from how high we were previously, sitting around that high sevens, 8%
Yeah.
kind of zone. Um, right now, conventional 30-year fixed mortgage, we're seeing low sixes.
Okay.
So that's doable. That's with 20% down.
Yeah.
Kind of just your standard kind of vanilla
Yeah.
mortgage
Yeah.
with decent credit score.
Okay.
So rates are looking actually pretty good right now. They are predicted to go down as well too, but we'll talk a little bit more about that here
Okay.
in a minute.
Awesome.
Yeah.
So let's back up a little bit. Let's talk about what affects our market, the mortgage rates, and kind of what borrowers can expect with that.
Yeah, with mortgage rates are kind of a complex animal because they're impacted by a lot of different things. So one is federal policy,
Okay.
inflation,
Yeah.
the location of the home,
Okay.
the purchase price of the home, um, somebody's credit score, how much somebody's down payment
Okay.
impacts it as well too. So rates have a lot of variables that a lot of them we can't really control.
Sure.
Or, like I said before when we were talking earlier, wherever you choose to live is where you're wanting to live. You're not
Yeah.
gonna you're not gonna move. If you want to be in Colorado, you're not gonna move to Kansas just to get a quarter percent better rate.
Sure.
Right?
Yeah.
There's way more factors in
Yeah.
there.
Absolutely.
So really, for the borrower, the biggest impact that they can have is really saving for a down payment.
Mm-hmm.
So save as much as you can for a down payment to have the strongest down payment possible, as well as take care of any debts so you can have the best credit score possible. Those two things are like the biggest factors.
Mm-hmm.
And then I think from a macro kind of economic standpoint, really Fed policy
Okay.
this year is going to be have a big impact with potential rate cuts.
Okay. So with that said, so as a borrower, to reiterate, the things you can control are your down payment and your credit score to a degree. So really saving that money and also getting an idea of what your credit score is, and even speaking to a mortgage professional who can help you, maybe work on that a little bit before you decide to buy a house. So that's something you can do now if you're thinking of buying this year.
Yeah, that's a great point. I have a borrower right now. They have a situation where they're going to be getting into a home in June.
Okay.
They've already reached out to me. There's some credit score things that we can take care of to
Okay.
improve that credit score. So by the time we are actually ready to lock that loan and get moving, they're going to have a way better situation.
Awesome.
And it's really just because they reached out 6 months ahead of time
Yeah.
and didn't wait till the last minute to be able to do it. So that can make a huge difference.
Absolutely. Yeah,
Yeah.
especially with this market when, as we'll get into, rates are looking like they might be going down. So if you're thinking of buying this year, getting a hold of your financial situation now is the best thing you can do.
Yeah, absolutely.
So then that dovetails into, what are we predicting? What are all the experts saying out there
Yeah.
with your crystal ball on what is going to happen this year?
Yeah, who knows, right?
Yeah.
But largely, I think the generally we can expect rates to go down.
Okay.
Right now, we're in the low sixes, mid sixes, depending on credit score, down payment, etc.
Hmm.
Um, that's going to cycle, just like the stock market. It's going to go up and it's going to go down. Right
Yeah.
now, we're kind of in a little bit of a downtrend. We would love that to continue, but I'd say general consensus is low sixes to possibly high fives by third or
Mm,
fourth quarter.
fives. We haven't seen fives in a while.
Yeah, I don't want to get anybody too excited,
Sure, sure.
but there is definitely talk of that. Some of the
Okay,
big banks are talking high fives potentially.
okay. Do they have any predictions on when this year? Are we talking Q2,
Good
Q3? Do we
question.
even know? There's obviously some variability there, but
Yeah, there's definitely
um,
going to be variability. It seems like most of the folks that I've looked at on their predictions, that's all the major banks, lending houses, Fannie, Freddie.
Yeah.
Anywhere from Q2 to Q3, we're going to see some
Okay.
of the biggest drops.
Okay.
Q4 potentially hitting that low um, or that high five
Oh,
kind of
okay.
zone. But as far as like a home buying season goes,
Mhm.
I would say early fall
Okay.
might be kind of a prime time.
Okay.
With that being said, we'll talk about it as well too, though, that we may be seeing a shift in the market to where it may not be advantageous. It may be advantageous to get in now
Mhm.
at the current rate and then refinance in 6, 9 months,
Sure.
depending on your situation.
Absolutely.
Um, yeah, the thought with the Fed policy so far, everything that's out there that I've read is that the biggest drops somewhere around June
Okay.
when the Fed meets somewhere in June, that
Okay.
we possibly see some of a bigger chunk of versus just like a quarter of a point or something like
Gotcha.
that.
Where it's
Yeah.
more substantial. And so, with that said, so what does that mean for our market this year? So, there are still people, a lot of people who want to buy, and many of them are just hanging out in the sidelines or wanting to sell, but they feel like they can't find something else because they don't want to get into a higher rate. They have a locked loan on their current home at a low rate from several years ago. They're scared to buy. So now, with these lower rates, we'll likely see a lot more buyers coming into the market in the coming months. And right now, we have a very low inventory. We have buyers who have significant amount of negotiation power. We in Chaffee County, for example, have seen a substantial decrease in purchase price versus, or excuse me, closed price versus the original listed price. So that means buyers are negotiating down with sellers. Sellers are offering concessions. There's a lot of buyer pool right now, and we would predict that that's not going to be the case as more buyers enter the market and the rates go down and sellers will no longer need to make those concessions, right?
Yeah. Yeah, I think it's pretty fair to say that as rates come down, along with low inventory, increased demand, that we're going to be switching from a buyer's market to a seller's market, and all those
Yeah,
little benefits
sure.
start to go out the window.
Yeah. So if
Yeah.
you're kind of thinking, especially if you see something good now, sellers who have their homes on the market in the winter usually are motivated.
Hmm.
I recently had showed a property and they literally said, please just send us an offer. Our
Yeah.
seller really wants to sell. So that you can leverage that as a buyer even at the current rates now, all right, and then potentially refi later.
Yeah. I mean, potentially, I mean, no, again, no crystal ball
Sure, sure.
on the future, but if you are interested in buying a home and you have the down payment credit score, you have the ability
Mm-hmm.
to, you found the place that you like, that fits you and your family,
Yeah,
I would I would jump on it
absolutely.
now and refinance later.
Yeah, or at the very least, speak to a professional who, like we said, can help you get dialed in on your finances and make sure that you're ready to buy when that home does come along in the next few months.
Yeah, and just to give an example, I have a borrower that's going to be closing on their house early February.
Okay.
And within about 10 days of making their offer, there was already two contingent offers on
Oh,
that
okay.
home.
So that's
So,
showing it's
and
already increasing.
it
Yeah.
is already increasing, and that is a higher priced home as well too,
Okay.
which generally speaking, those are a little bit harder to move when we're talking over 1 million, and they've
Mm-hmm.
already got two contingent offers
Well,
on that. So,
so buyers of all different price points are waiting in the wings,
yeah.
essentially. Anything to add for our viewers here on what's going on in the 2024 market, what we can expect?
Yeah, we're talking a lot about inventory and demand. And one of the things that's important to realize is demand will increase before inventory will.
Sure.
So
Yeah.
inventory is largely dependent on sellers wanting to move.
Mm-hmm.
But like you said, sellers are sitting on these lower interest rates from a couple years ago. So
Yeah.
it's gonna take, the rates to come down quite a bit for the sellers to be interested in moving
Mm-hmm.
because they'll get less house. The higher the interest rate is, the less house they get.
Sure.
So they would like a trade-off of like for like or at least close to that.
Absolutely.
So the demand's going to increase before inventory increases. So if you are interested in buying, but you are trying to wait for inventory, you might be a little bit behind on the demand side, which then would possibly cause either bidding wars or just increase in home values as the year goes on.
Hmm.
And so you may be actually paying a little bit more. So it's just kind of a
Absolutely.
fine balance there.
Absolutely. Yeah. Because if you're paying a higher price at a lower interest rate, at what point does that kind of become too expensive for you?
Yeah.
So, kind of weighing those pros and
Hmm.
cons right now. So, keep an eye on the market, speak to an expert on what's going on in your specific market. And thank you very much for watching. I'm Monica McCarthy with HomeSmart Preferred Realty in Salida.
And I'm
And
Jess Fisher with Peakview Mortgage.
and thank you for watching. Please like this video and subscribe. I really appreciate it. Have a good day.